Indonesia is struggling to revive economic growth, credit agency Moody said in a note published on Monday. High inflation, and the fall of the Indonesian currency against the dollar limit the potential for monetary stimulus to revive growth, Moody's warned. Inflation was at 7.3% in June, up from 6.7% for the same month in the previous year. And the government has not made progress on infrastructure spending which is needed to spur recovery, Moody's added. Last Wednesday, the government of Indonesia announced that the economy grew 4.7% in the second quarter, continuing a slowdown in GDP growth that began in 2011 with a decline in prices for commodity exports such as coal, and which has been exacerbated by a slowdown in global trade this year, particularly weaker demand in China, the note said. Because income growth has declined with exports, investment growth has dropped to 4.0% on average over the past 4 quarters from 9.1% in 2012. Although private consumption has risen 5% over the past 4 quarters, slower export and investment growth risk affecting household income growth, the note said. This, combined with high inflation, which limits consumer purchasing power, will reduce the amount that consumer spending will contribute to overall growth, Moody's said. While the central bank has relaxed restrictions on consumer credit, these measures alone are unlikely to revive investment, Moody's added. Despite the slowdown in growth, the government's space for monetary policy stimulus is limited because inflation remains elevated. Indonesia's currency, the rupiah, has depreciated 8.0% against the dollar this year, which also limits the ability of the central bank, Bank Indonesia, to lower monetary policy rates because it would stoke further currency depreciation, the note said. Government spending on infrastructure, which we expected would revive investment this year, has yet to materialize in a meaningful fashion. The government budgeted for a ramp-up of infrastructure expenditure to IDR 290 trillion, $29.5 billion, this year from IDR 178 trillion, $13.2 billion, in 2014, but overall state spending in the first half of 2015 was only 41% of what it planned. Increased public spending, if it occurs in the second half, would help revive growth by next year, Moody's explained.